Hi everyone, welcome back to Be Rich and welcome back to the podcast. So, Keshav,
Sir,
what are the questions you have today? What's cooking in your mind?
we already talked about mistakes that Warren Buffett did.
Hmm.
But whenever you talk about Warren Buffett, you also refer to this person, sir. Have a friend like Charlie Munger.
Hmm.
Did Charlie Munger also made mistakes?
Yes,
I want to know about that, sir.
being human is to make mistakes.
Yeah, sir.
There's no human being
Hmm.
who's made no mistakes.
Correct, sir. But
If you want to learn in life,
Hmm.
you have to make mistakes. Part of nature. So
Correct.
don't idealize people. First of all, realize everybody's human. Even great Charlie Munger,
Hmm.
who's 99, who's almost the verge of turning 100,
Hmm.
has made quite a few mistakes. When I say mistakes, I don't want to get into his personal life. There are also some mistakes that we made. Like all of us make mistakes in personal life. We're only talking about his investment life.
Okay.
First one which he made was underestimating technology.
Okay.
During the 90s and year 2000, this period, the dot-com boom, they stayed out of it.
Okay.
At that time, everyone looked at them and said they're crazy. They're old people. They don't know anything. Then, of course, the dot-com bubble burst. Then the fiasco happened. Then they were proven right. But there was the opportunities there to see making some money. There was free money lying on the table.
Okay.
But they didn't take any positions because they didn't know anything about it. They underestimated it. They said it will go away. It's a passing fad. Very famously, Frank Sinatra said that about the Beatles. When Beatles first came to US, Frank Sinatra, who was a famous American singer at the time, who was already very well established, he looked at the Beatles and he said, it's just a passing fad. It'll be there for a little while, they'll make some noise.
Passing cloud like this.
Yes, passing cloud.
Understood, sir.
We see that about some movie stars, no? This guy is not a hero, man.
Yeah.
He's not one movie, one hit he had, one hit
correct,
and that's
sir.
all. One
Then
director,
they
one
will-
hit and that's it. Next movie all flop.
Then we don't know where they went.
So
Correct,
he
sir.
said like that, but then it turned out he was wrong.
Hmm.
Same way Charlie Munger and Warren Buffett thought this whole computer, internet and all that is just one passing fad. Like how Bitcoin and AI, whatever we look at now and we keep saying, no, each year one new fad comes.
Correct, sir.
We don't know if it's going to stay or not. So he missed it. And because of that oversight, he missed his big opportunity to invest in Google's IPO. 2004, Google launched its IPO. They abstained. They didn't invest in Google. Like, imagine if Warren Buffett and Charlie Munger owned a huge chunk of Google, where their wealth will be sitting.
Somewhere else, sir.
Yeah. So they thought Google's not going anywhere. Google's not going to be anything. They stayed. That was another big mistake. Then during the 2008 financial crisis, no,
Yes, sir.
there also they were slow to respond. Slow to respond means what? They're not saving the world economy.
Okay.
Whenever there's a market collapse, like what happened when pandemic collapse happened, IndusInd Bank shares were going down to 200 rupees, 300 rupees, 400 rupees. Everyone was feeling nervous.
Correct, sir.
But if you're a good investor and you know the fundamentals, like what Anand says, you know everything about the company, like ITC collapsed. If you move fast, you can grab a lot.
Correct, sir.
If you decide, no, I'll wait, I don't know, you delay your action, the price starts, the profit margin. For us, 100 rupees, 180 rupees is no big deal, only 80 rupees. But now let's say about $100 million, $180 million.
It's a
Now
big
we're talking
difference.
about a big difference.
Correct, sir.
So you see the profit difference. So that
Understood.
delayed action, they lost some money on that. They could have made better. Then what you call the importance of what you call network is
Okay.
something that he's spoken about this. I can't give any specific example. Many technology companies were all networking with him and he had opportunities in this network. He overlooked them.
Okay.
Whenever you're someone like Charlie Munger, Warren Buffett, things come to your table. They overlooked a lot of things in their own network. People recommending, like, you come and recommend something to me, right? I know you, you know me. Based on that, you come and recommend something to me. Within our network itself, I overlook.
Okay. You didn't bother about that.
Yeah.
Understood, sir.
Because of my preconceived notions about you, what I think about you, that clouds what you're bringing to me.
Correct, sir.
As Anand says, me or Kutti Paiyan unga enna theriyum.
Correct, sir. Correct.
That problem also is there. Then, of course, another thing which he laments about is his late recognition in China, that he could have invested in China. Investment opportunities were there and they were late to that.
Okay. So,
When China economy opened and US was doing a lot more trading with China in the 90s. There are a lot of opportunities. American companies were setting up shop. People needed money. People needed investors. They could have diversified and moved. Imagine where Buffett's cash reserves will be if he had bought Alibaba and all these big companies.
Sir, but seeing all these mistakes, it's like he did mistakes only, but he's having so much cash.
This is true in life. In an over, there are 6 balls.
Okay.
You cannot hit every ball for 6.
Correct,
Don't
sir.
immediately talk about Ivraj and all that.
Okay.
I'm talking. It's a huge risk if you're trying to hit every ball for a 6.
Correct, sir.
Some balls you'll have to defend. So there are dot balls, but you try and make those other balls which you do score, try and score at least 1-4, 1-6, or whatever. One day match, T20, 1-4, 1-6. If it's a test match, couple of 2s and 1s you try and take. So you keep the run rate moving.
Okay.
So that's all. There are always opportunities which you miss. But if you put it against all the where they made money, like just recently the Japan deal, where Munger was praising Warren Buffett, it's like literally opening your chest and they're pouring money inside. Because in that deal, it's like I give you money to do business with me, and I give you profit.
Okay.
I just used Keshav's name. I call you, come here, Keshav. Here, take 100 rupees. Now you lend me that 100 rupees back, and I'll pay you interest 2 rupees. Literally like that. You look at me and you're like, sir, what are you saying? But that's what Japan did with Warren Buffett. They wanted him to invest in a few Japanese companies. They gave him the money to invest, and they gave him the money to him literally free.
So being a big investor makes this much
No, not because he's a big investor. It's because he's Warren Buffett. Please realize that there are lots of big investors. Japan did not go ask all those investors to come. Warren Buffett is not the only big investor in the world. He's a famous big investor. But there are many billionaires. There are many. So when you look at it like that, why Warren Buffett? Because they believe his integrity.
Okay.
Or he does what he says. He's conservative. He's based on some values and principles, which align with the Japanese mindset, and they decide to do business with it to his benefit.
Understood, sir.
Understood?
Yes.
So that is the lessons you should learn.
Okay.
Everybody makes mistakes. Learn from your mistakes. Try to minimize your mistakes and keep moving forward. And if you keep your integrity and you're in check, and you're an honest person, and your deals are honest, potential for growth is huge. It might be slow. You may not grow as fast as someone else, but at least you'll have your peace of mind intact, which is far more valuable than anything else. Yeah.
Understood, sir.
I hope this video was informative and entertaining, and I will see you in the next one soon. Bye.